produced, right? Whatever the stuff being produced is being consumed by households. So consumption happens this way. As a result, how does it actually work? Think in an economy. Only producers and only consumers. Tell me, for the households to purchase goods and services, from where do they get this income? Now, this is a closed system. This system is closed, right? No movement out, no movement in. See, does not trade with the rest of the world. If that is the case, if that is the simple economy, how will the households get money? How will the households earn to consume or to purchase goods and services produced? Yes. Those who are at the household, they can't like be inside the house and just be in the economy, no? Right? So those who are in the households, they will be employed in these firms, right? They will be employed in these firms. So as a result, they get the income from the firms. Clear? They get the income from the firms, from the producers. They take part in the economic activity which is carried out by the firms, right? And as a result, they will be getting income. Same on income, right? Same on income which was earned by the households is coming this way because of the consumption. So you can see how will the money supply or how the flow of funds will happen, right? In a simple economy. All right. So here, flow of funds to this side because these people do go work here and earn, and then the same will be spent on consumption. That is a simple economic structure. How the flow of funds would happen in a simple economy. Then this is a simple circular flow of funds. So it has been explained. Households earn income. So income was represented by Y. By selling their labor to the firms, right? In return, the household buy and consume the goods and services produced by the firms. At this point, it is assumed that household spend, important, households do spend all the money they earn. All the money they earn. Income is equal to the expenditure, also referred to as demand or aggregate demand in the home economy. So, when taken into a single market, we called it the demand. Ultimately, in the national level, in the macro level, we call it the aggregate demand, right? So, in a simple economy, remember, you might be getting questions from these. Be mindful. Sometimes the examiner might ask, and sometimes the examiner might say the question in a simple economy, right? In a simple economy, in a complex economy, in a national economy, in a market economy, can be, right? So in a simple economy, it is assumed that households spend all the money. So do households save? Do the people in the household save here in a simple economy? No. They earn 1,000 rupees, spend 1,000 rupees. Understood? So here, as a result, income is equal to the expenditure. Clear? Then, in all of these models, real things, goods, services, and work go in one direction, and payment for these, consumption, expenditure, wages, go in the opposite direction. Right? You can clearly see that. So in this simple economy, equilibrium, when the circular flow is neither increasing or decreasing, will exist when income equals consumption or aggregate demand. So using that diagram, we can say consumption is equal to income, right? Whatever earned is being consumed. no savings happens, no transactions cross border, just income is equal to consumption, or income is equal to expenditure, you can say, right? Moving forward, further in this simple case, total expenditure is made up of consumption only, so we can state that in equilibrium as well. So as I told in here, income is equal to expenditure, right? Income here is equal to expenditure. I can write income is equal to consumption, income is equal to expenditure. So as a result, consumption is equal to expenditure. It's like I'm friends with A is equal to B. So you have seen like axioms. Have you heard of? A is friends with B, B is friends with C. So as a result, A is friends with C. Right? I don't know whether that happens in life, but that's it. Okay. Tripartite. Then injections and withdrawals. Injections may not, but I'm going to this something not related to health. Injections, right? Injections and withdrawals. Now we know the features of a simple economy, how that works. Only two parties. Who are the two parties? Households and the firms. Households provide labor and earn income. The same one thing is being spent. So as a result, consumption is equal to income, and then also expenditure is also equal to income. As a result, consumption is also equal to expenditure. So there will be a lot of questions, just like turning all these things around, whether at once they will ask whether consumption is equal to income. Likewise, they can mix it up and ask, but have the understanding, so it's easy. So we are moving into a complex economy now, right? Now you know about the basics. Complex economy. The initial model of the circular flow was rather unrealistic, as it ignored the possibility of overseas trade, the influence of government, the fact that households might save some of their income. Lot of problems, right? So although we theoretically learnt about the simple economy, there's no such economy. Can you tell me a country where there is no government? Any country where there is no government? Forest, of course, yes. Lion is the king. No government. Apart from that, there is a government. Every country, right? Even our island nation has. We have a government, right? Now, so one problem is we ignored the existence of a government. Secondly, we ignored international trade. So as I've told you, one basic factor in learning macroeconomics is balance of payments. So any country, there will be no country where they are not doing any import-export transaction, right? I told you that even North Korea does, right? Now, do trade transactions? Check on that, right? They're so lonely, that's why. So one factor is not having a government. Second factor is not doing any international trade transactions, and then not doing any savings by the household. So we ignored these three factors and learnt about a single economy. But that's not the case practically in the practical world, right? So as a result, a more realistic model would recognize that circular flow can experience two basic options: injections and withdrawals. That is, when you take an economy like this, to this there will be injections. Yeah, for my BA1 class, no? And there will be withdrawals as well, right? Two basic aspects, which is injections and withdrawals. So if you like consider the economy as a closed system, there are two things which can happen, right? Flow of funds can happen towards the system, inwards, right? And also flow of funds can happen outwards as well. So just see what are the methods in which this injection? So if it's not that clear, you may mention here, injection means inward, right? When you take the economy as a whole, when you take economy as a closed system, injections mean something happening inward and withdrawals mean outward. So additions to expenditure from outside of the circular flow itself, that is injections. Injections boost the circular flow and include, see what are the factors which is there in injections. See for yourself what are the factors. So read it loud, guys. What are the factors? Injections, exports, government investment, private sector investment. So how does exports help in injections? How can that happen? Speak. These are practical stuff. Come on. I'm saying when you take a closed economy, exports can be considered as an injection. How can that happen? Yes. So if you increase the exports, what will happen? Foreign funds coming into our economy, right? So that becomes a injection. So the government is making an investment. Government is making an investment. Is that an injection? Agreed? Am I correct? So private investments, is that correct? Yes. Whatever the way, money will come into the inward. Money will come into the circular flow. Right? So you might get a question here. You might get a question if you really understood this. Now the government is inside this closed system. Isn't it? Isn't it? Government is inside this closed system. So how come these investments help? I'm telling you, understand? I'm telling you, whatever the stuff coming into this closed system, from outside, right? Just like aliens coming into the earth, right? So that is, now this is okay, exports. That is anyway foreign funds coming into the country, agreed. So how come this government investment? So government is inside this, no? How come? So government, where do they find money? Isn't it a question? It's a question. Was easy. Confused, no? Think. Practical stuff. How come? Here the government investments or the private investments, what do they mean is not the investment you and I make, right? No. Gautam Adani coming here and coming up with a solar power plant, that's a private investment. Elon Musk decides to invest here, right? Elon Musk decides to purchase Wisdom and you all together. Assets. That's the investment. So funds coming into our economy. Understood? As a government, right? Modi uncle came into Sri Lanka and agreed, "No, I'll give you $500 million, you keep it." That's okay, you, my friend. Foreign governments, Chinese government saying, keep $100 million as a gift. You may buy small toffees and stuff for your people in the country, you keep it. Money coming into the economy. So remember, although I say government investment and private sector investment, what does that mean? Remember, right? After 10 months, don't call and ask. So government is inside this, no? So how can you take? That is submitted. Clear enough? Those who are joining online, if you have any queries, you can ask. Right? So that is about injections or inward flow of funds. Now look at withdrawals. some element of income in the circular flow that is passed on as expenditure. Withdrawals which are, is that withdrawals which are withdrawals? Incorrect. So withdrawals also known as leakages, that is what it means. Leak. Leak means, so you mean government means foreign government investment only, not the local government. No, incorrect, Vidusha. Not the investments made by the foreign governments I referred to. Investments made by the government, our local government, using the funds received from abroad. That was what I was referring. Right? So see here, leakages. What do you mean by leak? That's not a good term to say, no, leak. Anyway, leakages. Think of a water pipe. If it's leak, what do you mean? I mean a water pipe. I was smiling. Which is, okay, it means the other governments are investing in ours, is it? Yes. Okay. Whatever the way, money coming into the country. Right? Again, leakages. Leak. What do you mean? For the third time. Leak means going out of a particular system. So imagine there's a water pipe, water moving in that. And if there's a leak means water is not going inside the pipe and it's going out. Withdrawals or leakages. So what are the stuff? Read loud. Imports. Taxation. Can't hear. Savings. Right? So it's so important. You may highlight this stuff and keep, right? So when it comes to the injections, there are three factors. When it comes to the withdrawals or leakages, I'll use the term withdrawals, right? I don't like leakages. Right? Three factors again. So altogether 6 factors. So tell me, like, when you do a lot of imports, it's quite obvious, right? It's quite obvious when you do a lot of imports, money is going out of the country, right? We are a proud nation and we have the birthright to talk about imports. Why? I told you, apart from the people right here, everything we do import, right? Including rice, dried fish and everything. If knowledge and everything could have been important, we could have done that. Right? So imports. Taxation. What happens? Taxation means, how does taxation help in withdrawals? Tell me. I'll explain. Before that, think. When the government do tax, you will have the question, think, right? Government is inside. Government is inside. We are being taxed. I'm telling you, taxation is a withdrawal. How does that happen? Because by taxing, the money is inside. Yes? Money is inside. So our government is taxing our people and is not taking that into foreign countries and keeping inside the economy. So how come? Savings. How come these two become withdrawals? Any idea? Speak. Yes. Yes. If you tax and if you do savings, these two will not help in this circular flow of economic activity. So when people are being taxed, what happened? When the taxes increased, imagine my salary is 50,000 again. Right? The exact figure I'm telling you. Right? 50,000. So poor me has to pay taxes 10,000 for a month. Imagine. So I have 40,000. Paying taxes 10,000, I have 40,000. So what will happen to my purchasing power? Gradually from month to month, in every country, there is a considerable amount of inflation, which is the same on stuff I do purchase this month, I will not be able to purchase that next month. And from that, the case gets worsened. Why? This month the government says your tax is 10,000, so my disposable income is 40,000. Understood? Next month, government raises these taxes into 15,000. So what's my disposable income? So what's the amount? Just as we saw in that simple economy diagram, what's the amount I can give maximally to the firms to purchase goods and services? Maximum I can give is 35,000. So what I can give to the firms reduces if I go ahead with taxation, paying taxes. Right? So as a result, when taxes is there, that is considered as a withdrawal. Why? The amount I'm passing on to the firms reduces. Understood? Those who understood it? Clearly understand, right? So these are very practical stuff. Take it into your head. You can't ever by heart this. That's why. Savings, similarly. I have my salary, 50,000. I'm paying taxes, right? Agreed, I'm paying taxes, 15,000. And then I decide that I should do something for my next eternity as well. So I'm saving some. When I'm planning to save something, now previously because of the taxes, for the firms, I gave a maximum value of 35,000. Understood? From that 35,000 also, I'm planning to save a bit. Right? So one day I have to leave after my retirement. Once I'm an old man, so I have to leave. So I have to save. If I save another stuff, if I save another amount, what will happen to the amount which I'm paying into the firms? Reduces. So every month I'm saving 5,000, which is I'm passing on to the firms just 30,000 for a month. Right? So whatever the amounts received by the firms reduces. Will that have an impact on the economy? Will that? Those who say yes? I as an employee, right? I as an employee deciding on making some savings. I'm asking, will that make an impact? Will that make any impact on the economy of the country? Will that? Yes. That will. So remember now, all these things do link. Do you remember that I told you under the monetary policy? Do you remember I told you when the governments raised the interest rates, what happened? When the governments raised the interest rates, what happened? Most of the people started saving. Most of the people started saving without spending. As a result, what happened? Producers were affected. Why? There's no people, although they produce, there were no people who is going and buying this stuff. So as a result, production gradually came down. So when production gradually come down, then again the central bank, what can they do? They can reduce the interest rates. So when they reduce the interest rates, people start to think there is no point in saving because whatever the return I'm getting is very less. No point. Rather than that, outspend and live. So spending increases. When spending increases, once again what will happen? Demand for the goods and services gradually increases. So as a result, when the demand for goods and services increases, what do the producers has to do? Producers has to what? Produce more and more goods and services. So can they do that where the interest rates are low? Yes. They can go to the banks, they take bank loans at a lower rates, and then they can produce more and more. So can you understand how all these things link in an economy? Understood? So you will have to understand this link, right? So if not, you will not be able to answer the questions examiners. Have the understand. You can't buy heart tones. Clear enough? Is there anything I just need to explain it again? Nothing? Right. So it was about injections and withdrawals. we'll be proceeding. So with exports, goods flow out of the country, but money flows into the country. With imports, goods flow into the country and money flows out of the country. Clear? What do they say? Money and goods. Huh? Then it is the flow of money that defines exports as injections and imports as withdrawals. Remember, flow of money, not the goods. Right? Flow of money decides about injections and withdrawals when it comes to imports and exports. Right? Flow of money, not the flow of goods. Clear? Right? Money. Circular flow of funds, money. Right? Then look at this. It reduces consumption, so it's withdrawal. Which one, Vidusha? It reduces consumption means which one? Right. So now look at the diagram very clearly. Right. So previously, what happened? Understand the difference. Previously, what happened? Households were there. Okay. Firms were there. Only we were talking about taxes and savings. Let me check. Taxes and savings reduce consumption, so it is withdrawal. Yes. Right? Only these two was there. Right? Whatever the income earned by the household, no any external impact, the same amount stuff was consumed. So money happened like that. Money flow happened like that. Right? But now you have withdrawals, which is from the system outward movement of the money and then injections. These are the 6 components, TSM and GIX. Clear? Now, how the diagram has changed, keep in your mind. Clear enough? Right? Okay. Equilibrium. An economy making full use of its resources will be moving towards a state of rest or equilibrium. For individual markets, right? For individual markets, we studied how the equilibrium happened. We drew the demand curve and we drew the supply curve, and then we understood where the equilibrium point lies. When the price changes do happen, when excess of demand, excess of supply, whatever the scenario, we understood that the equilibrium point can move from one point to another and ultimately will reach another new equilibrium. Did we learn about it in our previous Sol? Right? Few months back. So here, just like that, the aggregate demand. So why do I say aggregate here? Why do I say aggregate? This is in the macro context, right? All together, all the demands taken, all national income, national supply, likewise aggregate. Okay. So here, the aggregate demand and the aggregate supply might also reach a point of equilibrium or a state of rest. Here, state of rest. For the equilibrium to be established in the circular flow, planned injections should be equal to planned withdrawals. Anyone, please explain why I'm saying so. Why do I say planned injections is equal to planned withdrawals if this system is to reach equilibrium? Just simply think and tell. Why do I say so? Why do I say planned injections should be equal to planned withdrawals? Anyone? Yes? Cash flows should be equal. Okay, agreed. Yeah? Yes? Perfect. That's the exact answer. One is cash flow should be equal, and then one is there should be, the net effect should be zero, right? So I explained here, we were talking about only this part in a simple economy, right? Isn't it? In a simple, no, understand? In a simple economy, we were discussing about only these two. So here, income was equal to expenditure. Consumption was equal to income. So as a result, the system was in equilibrium. Whatever the income earned, everything, 100% consumed. So if the same on stuff, if the same on structure to remain in the equilibrium, even when you have the withdrawals and injections. So if the injections I take as plus, I can say the withdrawals is minus, isn't it? So if the same on system to be considered in equilibrium, if this is plus 50, what should be this? This should be minus 50, which is whatever the figure withdrawals is should be equal to injection. If that happens, what will happen now? The net figure, net impact, net, zero. Logically understood, right? So if the system is to achieve the equilibrium, just like this, planned injections should be equal to withdrawals. First part, right? Secondly, we were talking about injections and withdrawals true, but where from the hell this planned part came? Why do I say plan? Second question. Think. Why do I say planned here? I could have said injections is equal to withdrawal. Why planned? Yeah. So what are the factors coming under injections? What are the factors? Yeah. GIX, right? Government, investments, and exports. Withdrawals? Can't hear. Taxes? All right. Right? Just give me a second, Gulusha. Okay. So, plan means when you take all these factors, government has the authority to control. Taxation, can't they? Savings, can't they? Can, by changing the interest rate. Import exports, definitely can. Right? So importation of motor vehicles completely stopped for the past 5 years. Didn't the government take a decision? Yes. So I'm putting planned here because of the reason why, right? All the 6 factors in injections and withdrawals, the government can change. The government can not only change, if that of like a long, like who is having a long-term vision, if the government, they can plan on them. They can make this happen. So if the imports are really high, what they can do is they can bring up restrictions and they can restrict imports up until the point where you reach the exports equal to that amount. Right? You can come up with government incentives, government grants or whatever, and then you can increase exports. So if the exports is equal to imports, okay. Taxation, they can control. Savings, they can control. Right? Whatever the investments done by the foreign governments, they can negotiate. Right? So the president can move into a plane and go over there and then ask, see our country is happening like this. They can go to every country, give me something, and bring funds here. Right? So that is why I'm putting planned. Understood? Right. Then the question what Vidusha was asking. Taxes and savings. Isn't it good to have more injections than withdrawals? No. Definitely no, Tanika. We can't say that having injections, having more of injections, good. We can't say. Because imagine, out of the three components, Tanika, one was like government investment, one was private investment. So in an economy, there might be severe effects of those investments. Imagine we as a country can't manage, but the entire Colombo port, right, which is one of the busiest ports in Asia, is being owned and managed by Adani Group, India. Is it good? Is it good? I don't think so. That is good, we get investment, that is okay. But in the longer term, we as a country, our one of the major ports in our main city, we don't own it. Somebody else owns. That's a problem, right? So Chinese people have made investments here, has given a lot of stuff to the country. Is it good? Both the effects. That's true. They have like helped in highways and everything. That's true. But in the longer run, that can have negative. Nobody gives anything without benefits. So do you think that all these countries, China, India, and all these countries are feeling so pathetic about our economy? They really need to help. Like we are like their own people, right? We have like 2,500 years of linkage with India. So that's why do you think Narendra Modi came and gave all these benefits and everything? Do you think? Not on this earth. Right? There are a lot of stuff. As a result, not agreed with that. In an assumption we have expected J and W, so the world plan. Oh, that's the answer for what I asked. Right. So now see, equilibrium national income is where J, or injections, is equal to W, withdrawals or leakages. So the 6 factors, right? GIX and TSM. So that, again, that is shown, right? The simples again shown. It is not necessary that pairs of injections and withdrawals such as imports and exports, taxation and government expenditure. Another question. More exports than imports is good. Agreed. More exports than imports is good. Agreed. Without a problem. Okay. So pairs of injections such as imports and exports, taxation and government expenditure, that does necessarily doesn't want to be equal. Because why we are considering about 3 factors. See, our argument is injections, planned injections should be equal to withdrawal. So when I take this, when I insert figures for this I, G and X, I can insert 10, 20, 30. Altogether, using the calculator still, 10, 20, 30, 60. So definitely withdrawal should be 60, right? So the next part can be 15, 15, 30. Can that happen? Yes. I'm telling you, both the sets should be equal. I'm not telling you that imports should be equal to exports. Taxation should be equal to government expenditure. No. I'm telling you, as a bulk, these 3 should be. So this can be 10, 20, 30. The other side can be 15, 15, 30. Okay. Understood? The next thing, equilibrium only requires that the sum of injections, very important. You may highlight and put a star as well. Sum of injections is equal to the sum of withdrawals. Sum. Right? sum of injections equal to the sum of withdrawals, right? So we are discussing about all the 6 components today. All the 6 components, how does these things affect the economy, I'm discussing. So if J is larger, which is J is injections, W is withdrawals, right? So which is injections is higher than the withdrawals, additions to the circular flow exceed withdrawals, and so the level of national income will rise. If the injections keeps on increasing and increasing, national income, true, no, that is, there's nothing to explain. Imagine if the foreign governments keep on giving money, our national income will increase, right? So again, one thing, guys, practically speaking, again, one thing, foreign governments giving money to us, it's not something bad actually. Trust me, right? Now, US as a country give lot of donations to major countries. When you take Africa, almost all the African countries receive like lot of injections from the rest of the world. UK, Australia, Canada, and every country goes on funding Africa. That is not something bad. That's good. So, being a country, a foreign government can come to our country and establish a large factory and do something, right? That's okay. But the problem is when you receive that injection, that particular government should be able to plan that to reach that equilibrium I told you, so that whatever the money is invested properly to earn an income. That is where the question is. So when foreign funding is received, right, most of the governments, what do? They are corrupted. All the politicians take that money. That's not the case. So if you receive 100 million, you should, as a government, you should plan on having a return of 110 million and paying that debt. Isn't it? Does that happen anywhere? I don't think. Definitely, one that Sartak uncle is there in the country, that won't happen. You know, even the tsunami funding which came to the country went into his pocket. As far as the news channels say, I don't know. Poor me. Right? So that's how. So having foreign funding, having foreign government investments, it's not something bad. That should happen. So this is one aspect. Injections is higher. If withdrawals are higher, what will happen? Withdrawals are higher, circular flow are less than withdrawals, so the level of national income will fall. Right? So for the past 50 years, I think we continue to have a balance of payments deficit or a surplus as a country. We are having also say a surplus. We are having a deficit, right? Which is imports is very high in comparison to the exports. So what will happen? Whatever the foreign income generated, right? Whatever the dollars being created in the country, created means earned, is moving out at a faster rate, right? So that will help the national income to fall. It's not a help actually, national income will fall in the longer term. So as a country, what are the strategies we can use? What we should actually do as a country? Think of the practical context. I'm telling you, in our economy, imports is really high. Government corruption is high. So what can we do? Change the body government. We did that. That's okay. Now, what are the options? What are the strategies you can come up with? Imposing more import controls. Tricky answer. What else? What else? Now, as an economy, what do you should try? Imposing more import controls. So when these two are equal, the government can't make any profit. When what two are equal? More exports than imports can lead inflation as AD. Encourage exports, yes. What was this question? Idusha, what's that question? More exports than imports can lead inflation as aggregate demand rises. More exports can lead inflation, yes. Okay, aggregate demand rises. I can't understand. More exports means, so if the same amount quantity is being produced, now imagine if a company continues to produce 1,000 units, and if the same 1,000 units is being produced and having the same output level, if we continue to export and export, that's a problem. So then that will happen. So then demand for that will increase in the local countries. Why? So 1,000 is there, we are exporting 500. Next month 600. So for our consumption in the country, that reduces. So as a result, that will create a increasing demand for that good. And then price levels might rise. That will lead to inflation and demand increase. That can happen. Apart from that item. When you're asking what, when, which exports and imports you mean? Here, more exports, I answered that. When these two are equal, the government can't make any profit. I'm assuming the two he is referring to is exports and imports. That's not the case. Right? There's nothing like to make a profit that should equal. There's nothing like. That's two different factors. Right? Imports and exports. All right. Okay. So I'm asking what can we do as a country? It's basically one major thing I can do. One major thing as a country we can do is not that we can't like impose restrictions on imports. I don't agree with that because that's not actually possible in the practical world. Right? What we can do is as a country, we can maximize or we can encourage exports. That we can do. We can't import, we can't put restrictions on the imports, but we can minimize the imports. Minimize. Now, being an agricultural country, right? Having I don't know how many acres of like paddy fields, we do import rice. Right? Having sea all around, we import dried fish. That's the problem. So those stuff can be minimized. But there can be some major stuff. Imagine for major, so many of the industries, raw materials are imported. So that definitely has to. So putting restrictions is not an answer. Minimizing imports and maximizing exports. That's an answer. So you won't believe when it comes to the rubber industry, right? We have rubber here. We export rubber. We export rubber to Japan. They purchase it. They manufacture tires there. Double the margin, sells it to our country. That's how rubber industry works. So we can easily manipulate that. No? Why the hell should we send our rubber to Japan, then manufacture tires and pay double the price and bring it? We can have a rubber or a tire manufacturing facility here, manufacture our own tires here, then export. Then export and take that income. Right? So we quite recently came up with the tire factory, Ferentino. Right? We came up with that. So those are the stuff we can do. So it's really interesting learning this economics part. Okay? So think practical. These are the things you should do. Don't think about these factors individually, right? We should be, the sum should be equal. Injection should be equal to this. Okay, so we can't make the import zero. We can't do that. For major industries, we need chemicals and everything from the other countries. We should bring, but should minimize. Those who are clear about it? Right. So it's 10:23. We'll have the break, right? 20 minutes. And then we can be back by 10:43. Okay. So we shall discuss about all these factors individually. So whatever the questions you have, you can ask, even the online friends joining, and we'll complete it. Right, quickly go and come. Right, we'll start, guys. So, circular flow of funds, right? So we were discussing about. So this sentence is quite important. Remember, there were like two basic perspectives where like injections is higher and where like withdrawal is higher. But what you have to remember is this is important. In both the cases, growth to fall does not continue indefinitely. So it's like we can't say a country having injections, higher injections than withdrawals is better, or a country having higher withdrawals when injections is better. We can't actually decide on that. That depends on the country sometimes. Now, when it comes to a developing country, sometimes injections might be good because it needs development. A country like ours, right? So we need more and more injections from foreign countries, foreign aid, whatever the investments being done. So we need. But think of a country like Switzerland or something like. Do they need injections? Oh, don't tell me, don't ask. How the hell do we know? Right? Switzerland is one of the richest countries, right? So they don't want any injections. They don't actually want, right? They're so developed, they're so rich. So just so countries like that, they can think of like withdrawals. They have excess funds. They can give to poor countries. They can invest in Africa, Asia, whatever. So in that sense, that economy, withdrawals can be high. I don't know. Theoretically, can happen. So whatever said and done, both the cases of growth, in both the cases, growth or fall does not continue indefinitely. We saw how the cycles do work. So that changes, right? For an example, see, for an example, if growth results from additional investment, then further ongoing investment would be required to sustain it, right? Imagine using the additional investment we getting for our economy. If we continue to construct, let's say we are building up a huge, again another airport, an airport in Kandy, right? So need further investment and further investment. Imagine Chinese government agrees to give $500 million in building a like airport in Kandy. So if you can't complete, using 500 million. So you can have toy planes, you see? Only helicopters. We can't do that. So again, another requirement for another set of investment from another countries. Continue. So some withdrawals such as savings are related to national income. If national income falls, then savings will fall, reducing the overall level of withdrawals and hence slowing the fall of income, right? So can have several impacts like that. Savings, right? You just saw higher inflation led to the impact in savings in different ways, just like that. So further reading, so why have I given further reading? For me to read in the class. All right. You have to remember that further reading is for you to read at home, right? So you may read it. So these have been given more complex circular flow of funds, how this happens, right? I'm not going to explain. Just see. So we understood how a simple economy works. Then we understood a complex economy. And this is a more complex economy, right? Where the impact of financial institutions is also there. The government sector, households and firms is there, overseas sector. So what happens, everything you can read. Have just a small understanding. All right. Right. The next part. So we are going to look into, as I've said, components of the circular flow of funds one by one, right? We are going to look at. So firstly, consumption. Consumption. What is consumption simply? Because the basic, very basic two components which is there in a simple economy was consumption and income. So consumption means simply, speak. Yeah, demand. Okay. So people buying goods and services produced in an economy, simply. So the spending by people or households on the circular flow model is termed as consumption, that we already know. The single most important determinant of the level of consumption is the level of income. Why do I say so? It's quite obvious, right? Single main determinant, most important determinant of consumption is the level of income. So that whatever the level of income is linked with the level of consumption we are making. So a person earning 50,000 rupees for a month, what he or she consumes is not the same stuff consumed by a person earning 500,000 for a month. Different tastes, different interests, right? Different choices being made. Different. So consumption, the sole factor, you can say the sole factor, most important and the determining factor, consumption is income, right? So this is true in both individuals and the economy as a whole. Then we have a concept, marginal propensity to consume, MPC, right? Marginal propensity to consume, what does it mean? The extent to which consumption changes with income is termed as the marginal propensity to consume. So, as I've said clearly, consumption solely depends on my level of income. So, as a result, we are thinking of this concept, marginal propensity to consume, which is the extent to which my consumption changes. Imagine in this month, my income is 50,000 rupees and this is my consumption, right? So then in the next month, my income becomes 100,000 and what might be my consumption. So we just need, right? So then in the next month, my income becomes 100,000 and what might be my consumption. So we just need to quantify this. This is an important factor to quantify in an economy for the reason of why. Why do we need to quantify the consumption? So we learn now these things are the stuff which is important, right? So we understood in an individual market, we can continue to produce and produce. So whatever being produced, ultimately the demand will be created and an equilibrium will be set up. So then why do we need to quantify and see what the consumption is? Is there any point as to what you feel? Do we need to quantify? Do we need to? Demand and supply, did we quantify, guys? In individual markets? What was the factor? What was the factor? Now, being taught in the class, having done a revision before the whatever that shit mock exam, you did, right? I think this is the 40th time, I'm telling about this. The factor is price elasticity of demand, by the way, right? Price elasticity of demand, I've been talking about for the 40th time. So we just quantified the demand and the supply as well. Just like that, we are going to quantify consumption using, what's this? Read it loud. At least read it this loud. Marginal propensity to consume, MPC, right? So remember this. We learned demand and supply being quantified using price elasticity of demand, because we need to quantify and see if we change the price this much, how much will our demand would change. Just like that, MPC. So marginal propensity. So since you are really awkward in telling propensity, use MPC. Right? You can't tell it propensity. So use MPC. MPC. So it's calculated using, see, very similar to price elasticity of demand. Change in consumption, delta C, change in income, delta Y, right? So we'll see. Thus, if a person's disposable income increases from 100 to 200 per week, and their consumption increases from 90 to 105 per week, the MPC would be 0.75. So you can simply calculate, right? So here remember only the change. In PED, it was percentage change. Okay. Now, in the exam, most students do that, right? When you are calculating PED, you are taking just the change. And when you are calculating MPC, you are taking the percentage change. Remember, right? No percentage. So in other words, 75% of the increase in income has been converted to an increase in consumption. The rest has been saved. So simply put together, marginal propensity to consume is with the increase in income of mine, what sort of a consumption portion would be increased? Okay, so if my income increases, I'll continue to spend more, right? At least I'll drink a beer, isn't it? When my income levels increase. When income increases, what can you actually do? You will continue to save, or you'll continue to spend. What will you do? Think like economists. Income increases, what will you do? As economists, what do you expect? Okay. Those who say I'll save more. Guys, don't, right? No. Don't raise your hands, boys. Right? Income increases. Chill. Spend. Being economists, what economists expect? If your income levels increases, spend more, which is you are purchasing more and more goods and services, you are consuming, and as a result, whatever the economy, national income would enhance. So when you earn more and more, if you continue to save in the bank, no point. For you, of course, that's okay, but in the economic terms, there will be no help to the economy. Clear? Have that understanding? So consumption. Factors influencing the level of household consumption. So did we discuss this? MPC varies considerably between economies, with some Japan having relatively low MPCs and some USA having relatively high MPCs. What does it mean? Who spends more? Japanese people low, US people? I don't know. Here it says. As per this Marginal propensity to consume, high in US, right? Tend to spend more. Anyways, idiots. Generally, it is assumed that the MPC is a positive but likely to fall as income rises. Factors influencing the level of household consumption. Now, I can't help with it, but when it comes to these components, now in a circular flow of funds, we have 6 basic components, GIX and TSM, right? So those two should be equal. So we are discussing about every factor, and remember, have an Excel sheet or a chart or something where it will be easy for you to remember. But factors affecting everything we'll have to remember, right? Simply put together. Consumption. Income. I don't want to explain. Income definitely affects the consumption. Consumption is normally based on current income or previous income or the expected future income. When you say income, that can be the previous income. I had the previous income, not now. I'm unemployed now. The current income, what I'm earning now, and also the future expected income. Normally, that's what we do. If we feel like we are getting 100,000 in the next month, don't we spend that in the same one month? I do that. That's why you have something called credit cards. Very important, right? So you go ahead and spend and spend and spend. You don't have money, but you have the credit cards. You are getting the money after 2 months, so you can settle the credit cards. Right? So as a result, income, when you say previous income, current income, expected income, all affect the consumption. Secondly, wealth. I have told you many times the difference between income and wealth. What's it? No way that I haven't told. Income and wealth, what's the difference? Is there a difference? Income and wealth? Yes? No? Yes? Okay. So what's it? Income and wealth, what's the difference? 151st time, I'm telling you. Yeah, income. Income and wealth, I mean. Okay. No. That's not. Didn't I tell? Income and wealth? No. So income is like you are poor, you and me, like earning a monthly something, right? Earning monthly income, right? You and me, poor. So for a particular period, I'm getting a sort of certain amount of money for a particular period. Let's say for a month, this is my income. Let's say for a year, this is my income. Right? But think of Junior Rajapaksa. Is he having an income? Junior Rajapaksa means that big Rajapaksa is having 3 sons, and the smallest one who sent a satellite. You know that person, right? If not, don't live in the country. We have collected money and sponsored him to send a satellite. Don't you remember? So that youngest Rajapaksa is not having a single rupee of income for a month. But he is wealthy. Isn't he wealthy? He is wealthy. He have like 30, 40 properties all over the world, and then proposing to the girlfriend in Antarctica. You and I can't do that. I definitely can't. Right? So he is wealthy. What's the difference? Wealth means whatever being accumulated over a period of time. So over the past 10 years of his father's presidency, he has like accumulated a considerable amount of wealth. As a result, he is wealthy. But he is not getting the income. Right? You and I, wealthy. I doubt it. We are not wealthy. We are getting a income. There's a clear difference. Right? I'll teach you in the next level. There's the first lesson is taxation. So people in the country can be taxed on income or wealth. So if the people are taxed on income, poor you and I has to pay taxes. And that bugger doesn't. Why? He is not getting any income. But if the tax base is wealth, we don't have to pay. We don't have wealth. We don't have accumulated. I don't know about you, but I don't. Right? As a result, I don't have to pay taxes about wealth. But then, if the wealth is the tax base, that person has to. So, understood the difference between income and wealth? Okay, income is for a certain period. Wealth is over a particular period. Right? And remember that bloody bugger also. At an individual level, an increase in wealth may raise MPC because less saving is needed if you are wealthy. In the economy as a whole, a more equal wealth distribution is likely to raise consumption. Agreed? Do you need examples? Be honest. I can give. Right? So, the same one example. Economy, right? Economy and the Rajapaksa family is linked. Right? So, in the economy as a whole, more equal wealth distribution. Imagine in our class, this is an economy, right? He is the wealthiest person, right? Comes to the class in a Rolls Royce, lives in a mansion, eats, I don't know, lives with, don't know, right? And we are poor. We are the poor people, right? Most of the wealth in the economy is with him, right? So we are poor. Can we come in a Rolls Royce to the class? Can we do the other stuff he does? So if the wealth is equally distributed, now he is the wealthiest. Unlike that, if every one of us is wealthy enough, right? Everybody has money, right? So equal contribution of wealth, what will happen to consumption? What will happen to consumption? So if he is only wealthy, he will continue to purchase whatever he thinks, whatever he likes, purchases entire the shopping mall if he thinks. But if every one of us is wealthy, we will do the same. So as a result, what will happen to the consumption? What will happen to the consumption? Increase. Right? So in a national context, now think this practically. So, right? So to understand all this, only I'm giving these examples, right? So I'm not against any political party or anything. I don't actually care. Right? I don't actually care. I don't want. So using these examples, I just need you to remember all this stuff. That's it. Right? Let anybody go to hell. I don't care. I'm concerned about my students taking all these economic concepts into head and like living like a king one day. So take these examples into head and that's it. Economy and income distribution. In most of the developing countries, guys, this wealth distribution does not happen properly. But when it comes to the developed countries, see, in an index, if you Google and see the number of billionaires in every country, right? Number of billionaires, it's so high when it comes to US, UK, Switzerland, Australia, Canada. High. Why? Wealth distribution is relatively equal. Everybody has money. Everybody has money. So as a result, everybody goes and purchases. Everybody goes and consume. But in countries like ours, in countries like developing countries, most of the wealth is with a very few people. How many billionaires do you think in our country? I don't know. Just check. But a very small. So they consume like nothing. But majority doesn't. Majority of the people in the economy, what do? They just purchase the necessities. Whatever required just to survive. Right? So they like you can have a lot of examples about it, right? So people can't do. So wealth distribution as an important factor for consumption. Understood? Clear? So remember, right? Income, wealth. What's the third factor? And here, the nature of wealth may also be significant, like liquid wealth, such as savings in an instant access account is likely to raise consumption. That's also an important fact. Imagine being wealthy, right? How consumption is being affected, right? So income definitely affects. Then wealth. Talking about wealth also, that can, if I'm going a bit deeper, right? Talking about wealth, that will have an impact to the consumption if I have liquid money in my savings or current accounts in the banking system. Let's say in my debit card or whatever. So I just go to this OGF or somewhere else. I see something fancy. I decide on purchasing. Okay, the entire this thing, here's my card. I can do that. But I'm wealthy, but I don't have liquid cash. I have 25 properties in the 25 districts, but only 1,000 rupees in my account. Is there a point? In terms of consumption, there is a point, definitely. Having 25 properties, there's a point. I mean, in terms of consumption, right? So once I go to a shop and I see something fancy, right? So I can't purchase, but I'm wealthy. Right? There are people like that. Okay. So that will not add value in terms of consumption. Having illiquid assets, right? So if I have assets and if I have money in my account, that's okay. Once I go everything, everywhere, I'll just purchase. So that will increase the consumption levels in the national level. Clear? Third factor, government policy. By taxation and public spending, the government can influence the level and pattern of consumption. An increase in direct taxation lowers disposable incomes and thereby reduces the capacity for consumption. Higher government spending, particularly on state benefits, raises income and stimulate consumption. So, two-way process. So, government can raise and raise the taxes. So, as a result, whatever the amount I have from my salary to purchase something will reduce. Amount of taxes I'm paying is high. So, government can decide on that. If the government reduces the taxes, I have more disposable income. So, I'm spending more. And again, in the other way, alternatively, government also can enhance government spending. How can they increase? They can do raise incomes and stimulate consumption. They can do, like, imagine for the farmers, those who give this threshold of harvest in terms of paddy, government can decide we will give you 50,000 rupees every month. So what will happen? Farmers previously didn't had that amount of money in hand, but now the government is giving an incentive of 50,000. So they will like purchase something, they will like purchase some fancy stuff, they will like purchase some good food. They can. So if the government spending enhances, if the government decides on giving grants for the businesses, government might say, I'll give you 1 million rupees as a government grant, you just create 50 jobs for the country. Good. Consumption. Clear? Okay. Cost and the availability of credit. What do you think? Credit means what? Simply put together, bank loans, right? So the cheaper the cost and the greater the availability of credit, the more likely that the consumption will occur. Right? How will that happen? So I'm giving examples for everything for you to understand. Right? So if you feel like you will forget, you may note down simply. Right? Availability of credit. Imagine I have told you 1,001 times, when you go into a bank and ask for a loan, what's the document they require? Grandma's birth certificate. They need that level of documentation. But if they make it a bit more flexible, and if the interest rates are really low, right? If the interest rates are low, banks will have a promotion and say, okay, you come on this date. I don't want documents, just your NIC card. I'll give you 150,000 rupees. If that credit process is that easy, what will happen to consumption? What will happen? increase. Imagine commercial bank is putting up an advertisement. Entire next week, those who are learning in wisdom come to the bank. We will give a loan of 500,000 rupees. At 5%. No documents required, just the wisdom ID card and this thing. Won't you go? Those who are not going, raise the hands. You will definitely go, right? You will have many things to buy, right? You can have, okay. You don't think about purchasing whatever, but you will first go there and take that 500,000. Then only you will decide, now I have 500,000. I'll buy the latest version of the iPhone, right? I'll buy the MacBook or whatever. Or I'll buy a three-wheeler, right? So that rather than, right, going in the bus, I'll invest in that. You don't have a necessity, but if the credit is that cheaper, even though you don't have a necessity, you will go. You have one laptop, you will purchase another, a different version. Right? You will again purchase another iPhone so that you can have another girlfriend. 2 girlfriends, 2 phones. Necessities. Can happen, right? So if credit is cheap, consumption will, what will happen to consumption? Increase. Price expectations. Price expectations. When price rises are anticipated, consumption might be brought forward, temporarily raise MPC. Have you heard of something called bulk buy? Heard of? Now, we experienced that just before the announcement of these lockdowns, right? COVID time. Were you there? COVID time? No, you were small. COVID time means just 2020, 5 years back. So when the governments were about to announce that the country will be locked down for the next 2 weeks, what did the people do? They slept at home. They quickly went to the supermarkets, and if you need only one item of that, you purchase 5 items. Right? Fuel, entire, taking gallons also and taking fuel. And supermarkets, if you need 10 kilos of rice, 50 kilos of rice. Don't people do? Price expectations. Because why? People were so afraid that there will be no stuff left and the price will go high. And then took people. It comes to fuel, they store and store and store, take gallons and store. Then after some time, 1 liter, 2,000 rupees. That's business. Price expectations. So again, consumption. Now tell me, what are the basic factors affecting consumption? Quickly. Income, wealth, government policies, then cost of credit and price expectation. Everybody can remember? Right. Perfect. So note these factors can be described as objective influences. In contrast, there are subjective influences as well, which determine individual behavior irrespective of their factors. For instance, some cultures encourage high levels of savings. In Japan, that's what I said. Marginal propensity to consume in Japan is quite less. When it comes to US, chill country, no? People need to spend, right? Spend, drink, right? All about chilling. No savings made. But when it comes to the cultural factor, Japan saving a lot, right? It is also usually argued that consumption by individuals in urban areas is higher than in rural areas. That I'm not going to comment, right? In rural areas, right, consumption levels less, right? Urban areas is high because if you have money, you can do everything possible in urban areas. Think of we'll take Colombo and Hambantota. Think of the things you can do if you have money. You can do all the clubbing, drugs, and everything here. Hambantota, less facilities. As far as I think, don't know. Right? So that's what they say. Countries wise, cultures wise, urban, rural wise, that can change. Consumption factor. Clear enough? Question number 3. Quickly take the answer. If you understood. The question is asking which of the following is least likely to result in a fall in consumption spending in an economy. That's it. That's it. That's the answer. Which of the following is least likely to result in the fall in consumption spending in an economy? Those who say A, those who are joining online, put the answer in the chat box, please. Those who are saying it's A, B, C. Very few. D. Okay. Least likely to result in a fall. So, an increase in the rate of income tax, what will happen? What will happen? Fall in consumption. No, an increase in the rate of income tax. Less amount of disposable income, that will affect. An increase in interest rates. Increase in interest rates. People will save more, and as a result, people will spend less. See, an increase in the rate of inflation. What will happen? Leave it. Then D, a reduction in the availability of credit. What will happen? Reduction in the availability of credit. You're going into the bank, no loans. No. Come in your next hole. What happened? Consumption reduces. So the question is asking which of the following least likely to result in a fall in consumption? Answer is C. Why do I say so? Or increase in the rate of inflation, how does it increase consumption? I told you when it comes to the inflation, there can be some effect. Some of the people might think, why do we need to save more if there is inflation? If the inflation rate is increasing and increasing, some people might think, there's no point of saving. Rather than that, why don't we spend? Why don't we spend? And why don't we live? Right? So as a result, what will happen to the consumption? Increase or decrease? Increase. Clear? Okay. The answer would be C. Next factor. Right? Next factor is savings. So we have discussed about the consumption. Now the second factor is savings. Savings is defined as the amount of income not spent. Right? So you have a considerable amount of income. One portion you pay as tax, and you decide on making some sort of a amount which is not spent. You keep that for future. That is savings. It is therefore sometimes regarded as a residual, the amount of income left after the consumption has been determined. Right? Now, when it comes to a person, individual, when you take the salary, now you have to pay 50,000 is the salary, 10,000 is the tax. So without like spending on the necessities, you can't like save, no? So I'll be having only 2 meals for the next month. So I'm saving, guys. Can you do that? You can't do that, no, come on. So whatever the amount after the consumption, whatever the residual amount which remains can be interpreted as savings, right? And then thus the factors determining savings are mainly the mirror image of the factors determining consumption. Almost the factors determine the consumption. Why? After consumption, what remains only will be saved. Right? So again, the same one factors affecting this income. Definitely, if you have a big income, now considering the inflation levels of the country, if you have an income of 50,000 rupees, there's no point in saving. You need additional funding from parents as well, if you are to live. But if you have a salary of like 1 million rupees, that's okay. You can manage whatever the shit you need, right? And then also you have some portion to save. So with the rising levels of income, there's high tendency of saving. Interest rates. Definitely the interest rates will help, will encourage savings. So if the interest rates are really high, so just after the COVID, right? Practically, I'm telling you, remember, just after the COVID, all the industries, all the banks, all the individuals, everybody in the economy, they decided on making the same own decision just to put the money in the bank or whatever the money market, earn something, be at home. That's what they did. Because you know the interest rates went up to how much? Interest rates for the treasury bills, we paid 30%. 30% for the treasury bills. For the fixed deposits, 25%, 22%. So imagine in an economy, right? Imagine in an economy, we are like, for the fixed deposits, we are paying 25%, right? I have 1 million rupees. And what will I do? Will I like do any business where the entire country is locked down, right? Entire country is locked down, nothing, no economic activity. So do I have to take a risk and do a business? If the interest rate is 25%, so I'll go and invest my 1 million rupees in the bank. Within just 4 years, my investment is double, isn't it? So for 1 million, 25% into 4, within just 4 years, my investment gets double. So every person started doing that. Every person, every company started doing that, right? Laid off all the employees, companies went on like depending solely on the fixed deposit. Trust me, the banks did the same. Banks entirely stopped their business. What's their business, banks? Huh? Lending. Lending is the business. So did banks give loans to you in the COVID lockdown? Not a single loan. For the businesses, no. High risk. So what did the banks do? Banks did the same thing. Whatever the deposits and whatever they have, they went and deposited in the treasury bills, treasury bonds. Right? Earning the interest income. No risk taken. So as a result, interest rates has a huge impact. So during that period where the interest rates were at that range, do you think there was any economic activity happening in the country? No economic activity. Nobody produces, only consumption. So what will happen? Ultimately to the prices, price levels. What happened? This was just 5 years back, by the way. You were in your senses, no? 5 years back? You remember? You were this much. 5 years back, even I was this much. I was anyway this much, right? By the way, right? So remember, those things did happen. This is economics. Huh? So what happened? Lockdown. Everybody comes into saving. Economy is solely reliant on saving, no economic activity. So nobody is producing. What will happen? Very small output coming into the market. How do you think about the prices? Very high. Prices very high. Then only with time, we managed somehow, right? Expert economists we had in the country, for heaven's sake. So as a result, we managed gradually, right? So production. So what the first thing the governments did? What's the first thing the government did? So all this mess was due to the interest rates, no? Brought down the interest rates. So what happened? When the interest rates were brought down, all those people who went and put on fixed deposits decided there's no point, so we'll have to do something. Then only they recreated the economic boom for the SME sector. So the industries, they gave concessions, right? They said, you won't believe the relief measures given to the industries. The government said, take 2 years. Don't pay a single loan you have. Consider producing. That's how we came up, right? That's called moratoriums. We gave moratoriums for the loans. So for the 2 years, you don't have to pay loans. Stop paying loans, but continue to produce. Economy first. Right? So that's how we came out of this thing. Okay? Lot of economic system. So interest rates, can you understand how important it is? Can you say yes? Good. I'm happy. An increase in the rate of interest will mean that the people need to save less in order to achieve a given target of income. However, this income effect can be offset by the substitution effect. With high interest rates, people might save more and spend less, as saving is now more attractive. Inflation. To rational consumers, the rate of interest is less important than the real interest rates, allowing for inflation. Even if the money rate of interest rates is high, a low real rate of interest. Do you remember we discussed about the real interest rate and the money interest rate? What was that? Yes. Do you remember that the real interest rate is what is adjusted for? Inflation, right? However, consumers might suffer from the money illusion and save more when money interest rates are high, even if inflation reduces the real rate of interest. So why do I say inflation rate affects the savings is, right? For a fixed deposit, if the government is paying 10%, and if the inflation rate is at 12%, is there a point? There's no any point. When you consider the real interest. So the banks might say, look here, come here, buddy, I'll give you a small gift as well. Put a fixed deposit at 10%. So you're so good, we'll treat you with a tea even. Banks might say. But you will have to think of, if the inflation is 12%, although I get a return of 10% from my fixed deposit, I can't use that. Right? That is already wasted away with the inflation, real rate. So inflation rate and interest rate both affect the savings level. Understood? Credit. When credit is easily available, consumers might acquire as much as credit they are saving. In effect, there is no net saving. What is meant by that? If the credit is so cheap, now why do people actually save? Tell me. Ladies definitely save. There is no specific reason. That is their birthright to save. Right? Women, when it comes to women, saves more. Right? And when it comes to lending, banks would love to lend to women. Every bank in the country have a women banking sector. Do you agree? But do you have a men's banking sector? Do you have? Haven't you seen? Every bank is focused on women banking. Why? They could have focused on men's banking. Right? Yeah. Lady is quite economical. They don't spend like that lavishly. Sometimes do. When it comes to clothes and everything they do. Rest of this stuff, no. Right? So the important point. If credit is available, people do save, basically thinking of the future. Right? Now you might like save small 1,000, 2,000 rupees. Like when you have the fourth kid, how can I spend on his education? You might think of the future. Right? Or how can I send my fifth kid abroad? Right? You might think that's why you save. But if the credit is so cheap, you can go to the bank anywhere, anytime, and you can get a loan at around 2%. So if that is the case, will you be tempted to save? So by the time I have my fourth kid, that's okay. The rates will be around 1% for a bank loan. I'll send him to Antarctica to learn. Right? You see, there's no point in like saving, no? Credit is so cheap. But when it comes to the credit, and if it's so expensive now, a personal loan is at 25%. So what will you think? Thinking of future, my goodness, not about the fourth kid. Next year I will have to survive. So as a result, I'll need to save some. Temptation to save. Understood? Right. Contractual savings. Most household savings is contractual and regular, such as payments into pension schemes. Now, at my scenario, you mean the general scenario in the country, although now my salary, I don't want to actually save. I don't want. Right? I need my entire salary to my hand. I have a hell of a lot of work to do using that. But I can't help it. The employees in the country, in the labor law, there's something that I should contribute to pension schemes. Shit. No point. Every month, whatever the salary I get, 8% is deducted, and they give that 8% to me once I'm 60. To hell with that. No? At 60, getting that much of money, what to do? Now only I need money. Did you get my point? But I can't help it. That's the law. That's the contractual savings I have to do. So anyway, from my salary, 8% is deducted to pension. So by the time sometimes when I like get the pension refund at the age of 60, I'm dead. So somebody else will get it. Right? So as a result, savings, contractual savings, even though you like it or not, that is contractual. Okay. So then that's about it. Quickly, what are the factors affecting savings then? Now, consumption, savings, income, interest rates, inflation rates, credit, contractual. Clear enough? Easy, right? Most saving is undertaken by households and the company sector. Governments save when they run budget surpluses and dissave when they run budget deficits. Think of our government. Our superior government is saving. Do you think? Our government is saving. Government savings. Do we have a concept called government savings here in our country? Government savings? Have, in the true sense of the word, it's a concept. Have, true sense of the word, it's a concept. We don't have government savings. We have a budget deficit or budget surplus we have. Deficit. Do we have excess money to save? To hell, no, right? So as a result, some governments might consider saving, right? If they have excess, if they have budget surpluses. So they budget for the next year. This is my requirement for the next year for the entire country. So if there are additional funds, they can save at the national level. Okay. Next one, investments. Expenditure on investment expenditure on investment covers fixed capital formation, value of the physical increase in stocks of raw materials, work in progress, and finished goods. Fixed capital formation means what? Fixed capital formation means plant, machinery. Now, the government coming up with another highway, right? So, government coming up a highway from Colombo to Jaffna. They think of having a. So, that's a fixed capital investment, right? Fixed capital investment. Then, apart from that, value of physical increase in stocks and raw materials, working progress and finished goods. They can think of that aspect as well, which is the longer term and the short, both. So the governments can spend in creation of this short term stuff and then long term. Okay, both aspects. Investment is undertaken by the public sector and private sector, both firms and households, and it enhances the capacity of the economy. Capacity of the economy. What do you mean by capacity of the economy? If I say our economy has a huge capacity, what do you mean by that? To do what? To do what? Capacity? To produce, to grow. Huge capacity to grow. Now, our economy, to be honest, has a great potential and capacity to grow. We have all the natural resources we require. Just a matter of proper manipulation. So just like that. Yes, the capital stock of the economy is increased by the amount of net investment undertaken. Net investment is the difference between gross or total investment and the replacement investment, which accounts for the deterioration of existing capital stock. So that's also important. When you take the investment level of the country, of the economy, now we are at a position. Now we have 2 airports, few harbors, a proper highway system, and likewise, economy-wise. We will be focusing about the investments or the foreign investments or injections into the market, into the economy. But we will have to remember the concept of net investment. Why? Whatever these capital structures we have goes on deteriorating, right? Highway system, there's a huge maintenance cost. So, do you think that the highway system will be there for the next 100 years? Highways? Harbor? Mattala is airport. Hambantota is a harbor. Okay, harbor. Harbor will be there for the next 500 years for the country. Is it? So, there is, when you are making an investment, you will have to make investment to keep the same, the certain level, the threshold level which we already have. You'll have to maintain the harbors, you'll have to maintain the airports, you'll have to maintain the highway system and everything. Investment is something going above that, right? Something which will add value again. So if there is another airport coming in whatever the part of the country, that's an investment. So talking about investment, we'll have to think of actually net investment. So when you invest into the existing highways, harbors, or ports, that's not actually a true sense of the word. That's not actually an investment. That is maintenance, right? So whatever the investment we are talking about should be the net amount. Understood about it? We are talking about the national economy. Okay. So in the other words, some investment expenditure is just to replace worn out assets, so does not itself contribute to the economic growth, right? So when you maintain and keep the same amount capital structures in the country, that is not economic growth. That was existing, right? Country's railway system. Who manufactured it? Railway means where the trains go, rail lines, right? And where the lines are there. Railway, where the trains go. Who manufactured it? Which government? I know you were not there by the time they manufactured, but you might have learned it. Which government? Be quick, be quick. Ranils. Then British government here. Yes, true. British people did, not our own people, right? British people, that was in which year? I don't know. We took the independence in which year? 1948. So which is before that, right? Before that, we had the British rule. So somewhere in between 1980s and likewise. Yeah, you were in the previous soul. Okay. So British people gave the railway system. Have we made any enhancement? Have we made a single railway after that for the entire 77 years? Economic growth. That's what this sentence is. British people gave us the railway system, but afterwards on a daily basis, we did maintenance, right? People go with this thing and check whether that is okay, everything done. Maintenance. Not a single railway line, just 2 meters. So that is not investment. That is just maintenance, right? So if we have created rails, imagine we can go to India also in the train. If we did something like that, that is economic growth. But this is not. All good? Right. So in other words, some investment expenditure I told you. Import. Read this. What's inside the box? Read this. So important. Do not confuse investment and savings. Right? You might think savings are, now read this properly first. Savings are a withdrawal from the circular flow of funds that can be thought of as an investment from a personal point of view, but not from an economic one, while investment is an injection. Import. When I say savings, right? When I say savings, whatever the savings you do is an investment for your future, right? So you thought of like sending your fourth kid to Antarctica to learn. So that's a saving. Whatever the saving you made in your individual context can be an investment to you. Okay? Can be an investment to you. Whatever the saving you do in your context. But we are learning about the national context, macroeconomic context. There, do not confuse. Savings means whatever the income, whatever the stuff which is there to carry on the economic activity, taken away. Withdrawal. Savings is a withdrawal. But an investment means an injection. Right? Remember about that. In your personal, this thing, savings and the investment, you have investment plans and everything. That can be the same. But national level, different. Okay? All right. So then FD, is it a saving or an investment? Saving and investment, both to you, not to the national context. Okay? All right, Danika. If we assess investments using discounted cash flow appraisals, then we can say that the main determinants of the level of investments are. So whatever the investments they make, so imagine Chinese government spending $500 million on our country to have an airport in Kandy, right? So then they get directly travel to Kandy and invade, right? So if that is the case, the airport will be like coming into action after like 5 or 6 years. So the investment they made, the $500 million, in the present context, to take the impact of that, we will have to calculate the present value. So as a result, we will have to have the discounted cash flow and understand this is the impact to the economy in this year. When you are calculating the injections and the withdrawal balance, so that you can come up with the equilibrium point. So expectations about future cash flows. These expectations will be influenced by the anticipated revenue from the output of the investment compared with the cost. the business's cost of capital. So when you are like discounting, you have two factors to think of. If you have a cash flow for the next 10 years, how can you take the present value? Two factors affecting it. Firstly, the cash flows happening every year. Secondly, the cost of capital, the discount factor, right? Other factors that influence investments. What's the first factor? Can't hear. State of business confidence. If businesses are optimistic, they are likely to expect greater returns than if they are pessimistic. This will affect the estimated cash flows and perceived risk in the NPV approach. A controlled level of anticipated inflation can lead to increased business confidence. So, when you are taking the present value of the future cash flows, right? Imagine that's future. We are making assumptions. We don't know, right? We are just making assumptions. If you are making an assumption for the next 10 years, the economy of the countries tend to improve or grow at a rate of this much. So the business will have greater confidence. Right now, the country's experience is something like that. Government has changed, corruption is at minimum levels. So as a result, business have greater confidence. Businesses do think for the next 5 years, the business world would be okay. We can have better returns because taxation system would be okay. Monetary system would be okay. Low levels of corruption, increased confidence. As a result, the state of business confidence will lead to investments. So businesses, if they think we will create increasing levels of cash inflows to the business, they can go for investment. Right? So if I'm running a business, if I have the confidence that for the next 5 years, my profits would grow and the government will keep the same on stance in terms of the fiscal policy, I will just think of expanding my factory into 2. I will just think of making some more investments. I will think of moving to another country. Right? So as a result, state of business confidence would affect investments being made. So what happened previously when we were having that economic downturn from 2019 to 2023 mid, all the people in the world, all the foreign governments lost, not even the foreign people, even us, right? Even the Sri Lankans living abroad lost the confidence in the country. Didn't it? They lost the confidence about the government, that they are corrupted, that they don't do it properly. Because of that, not a single investment came. Not a single person want to send money here. Those who are working abroad, they didn't want to. Exporters, they didn't bring back their proceeds. Their proceeds were kept somewhere else, Singapore, somewhere. But when the market confidence, when the confidence was there, right, when a proper government came and when the regulations were changed, when the confidence level enhanced, injections did happen. Foreign governments came, foreign governments gave help, likewise, right? All these things with practical examples, remember, right? So, secondly, what's the second factor? What's the second factor? Technological innovation, right? Technological innovation. If capital becomes more productive, it is likely to raise the level of investment at any given interest rate. So all the companies have started investing into AI, isn't it? Technological innovations, right? So increased confidence once again. So businesses is having the idea that when it comes to the next 5 to 10 years, we will require very less amount of manual intervention. Most of the jobs will be taken away, right? Done by AI. As a result, if they have that much of this thing, What will they do when it comes to the digitalization and all this AI and stuff? They will invest more. They will invest more in that. Every company will try to bring out a chatbot or bring AI into the system, right? Government policy. Inconsistent and varying economic policies might increase business uncertainty and thereby deter investment. In contrast, reduction in corporate tax and improved tax allowances will help. You know that, right? Government can change it. Government can reduce or enhance the corporate income tax, and using that intervention, they can encourage the investments being made. Clear? They can tell the corporates, they can tell the industries, we shall reduce the corporate income tax rate from 10%, but for the next 2 years, you will have to set up 2 more factories and 100 employees should be recruited. That's a condition. Government can tell. So government policy. So what are the factors affecting investment once again? Factors affecting, yes? State of, okay, confidence, technological innovation, government policy. Now we discussed about 3 basic factors, right? Consumption, savings, and investment. Next part we shall start anyway. Linkages between different elements of the circular flow. So how many factors are there in the circular flow? In my fingers as well. He's counting like this. How many factors? 6 factors, right? So there are linkages. There are 2 key linkages basically in these 6 factors. The first aspect is accelerator and then the multiplier. So what do you mean by the accelerator? For growth to occur, the economy has to be able to increase output of goods and services that we understood. In the broad macroeconomic context, there were 4 things which we had to focus on. What were the 4 things? Growth, yes, inflation, unemployment, balance of payment. So in terms of macroeconomics, those are the stuff we are studying, right? So accelerator effect is for growth to occur. First factor, growth. For growth to occur, the economy has to be able to increase the output of goods and services. True? The level of output has to increase year by year if we are to say that we are experiencing economic growth. Unless a spare capacity exists, where national producers are not running their factories at full capacity, this will require additional investment in capital goods. Take a company now, it has a huge factory where it can manufacture 10,000 units for an year. But they only do manufacture 7,500 units, which is, there is a spare capacity of 2,500. So if there are companies like that, basically, what the government should try is to bring that to the maximum level. They should encourage, give tax concessions, right? They can give tax concessions or whatever and encourage, bring that to the maximum capacity. And if they reach the maximum capacity, then afterwards they will have to come up with additional investment in capital, which is set up another factories, bring down machinery and like this. So failure to increase the output at a time of rising demand would simply result in inflation, more money chasing the same amount of goods. That's true. So when the demand is rising and rising, and if the producers can't produce up to that rate, there will be an excess demand created. So that excess demand will lead to, what about the price? Excess demand. Price will increase, right? So producers are not producing. So then what the government should do? encourage more and more about the producers to produce. The accelerator principle views investment as a function of changes in national income. That is, as national income rises and desired consumption increases, firms will respond investing in new capital goods to meet the extra demand. This in turn increases the aggregate demand further within the economy, increasing pressure for more investment. Thus, when an economy starts to grow, this is itself can fuel further growth. You may underline it and keep. When an economy starts to grow, this in itself fuel further growth. You may highlight. So what do they say is, when an economy is growing, what the accelerator effect mentions, just 2 minutes, right? Just 2 minutes. So when what the accelerator principle weaves is, when the changes of the national income happens, right? Whatever the way said and done, if the national income increases, there can be ways government can do, exports proceeds coming, increase in national income. So as a country, as a government, what they should focus on is increasing the national income. That is what the accelerator principle says. If you like increase the national income, rest is done. So what will happen? Explain. When you increase the national income, what will happen? Consumption will parallelly increase, right? So people will have more and more income, so consumption increases. When consumption increases, what will have the producers have to do? They will have to produce more. So if they have to produce more, if they have the spare capacity, that's okay. If they have the spare capacity, they will have to increase that. So the spare capacity is 0, maximum output. And if the maximum output is even reached, they will have to think of again capital investments. Why? They will have pressure for investment because the demand is high. So as a result, they will put up more and more factories, more and more jobs created, right? As a result, the economy would grow. If the output is increasing, if the national output is increasing, which is if the aggregate demand is increasing, can't we say it as economic growth? Can't we say that is economic growth? So accelerator principle talks about that. Just you have to do increasing national income, rest automatically adjust. Understood? Right? So I'll stop it from there for the day, and we shall discuss about the multiply effect next week. Do the questions and come at home. So I'll be spending very less time on questions, on these questions, because it's easy, right? Do the questions and come. We'll be meeting on Saturday next week. All right. So thanks for joining. Whatever the questions you have, you may raise. Thank you. Financial systems too, didn't we complete the questions? We completed, no? We completed, Vidusha. Last week, I think we completed. No? I see.